Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com, where I dive deeper into all these topics, subjects, sectors, looking for investment opportunities, sharing those opportunities with everyone. I also share my strategies, how I allocate to portfolios, my position sizing, and my viewpoints on the macro and all the other stuff in cycles, ratios, and technical analysis. I share it all. I try to approach it through a teaching perspective so you guys can learn my approach and my opinions to the market. And if that's something that interests you, if you want to learn how to do this stuff, you want to learn how I find companies, if you want to see how to get 2, 3, 4, 5 baggers using technicals and all that stuff, sign up, special with the coupon code. You can get $25 off the first month only on the monthly membership, and you get a $100 discount on the yearly membership. So coming on down, we've got Amy Nixon here, and I've been kind of a doubter on some of the stuff that she shares, some of the opinions that she has. This is what she is sharing here. Just completely insane, backwards statistic. In America today, people over 70 have more outstanding mortgage debt than people under 30. Historically, young people took on debt to buy homes and raise families. And people over 70 should have paid off their homes long ago. Well, I think she's missing the bigger picture here. I have money. I saved in my 20s. I saved in my 30s. I became a multimillionaire. Why do I still carry a mortgage on my house? Why don't I pay it off? I have the cash to pay off my mortgage today. Why don't I do that? How come 70-year-old people may not be paying off their mortgage? I don't know if it's from lack of cash per se or lack of wealth. What the government has done and the Federal Reserve is make us all speculators. And the easiest way that one of the most sure things that I know that's coming down the pipeline is more money printing. And if they print more money, how is the best way that I can take advantage of that? I can own assets, and assets go up when they print money. I can also borrow money, lock in a 30-year mortgage at a very low interest rate, and let them completely destroy the purchasing power out of the currency, where I pay back the mortgage with less purchasing power money than what I took the money out to begin with. And that's called being financially smart. So I'm not paying off my debt because I think the dollar that's going to pay back my debt is going to decline at a faster pace than the interest rate that I pay on that mortgage. I have a 2.75% mortgage, and I think that the dollar is declining in purchasing power more around the lines of 10 to 15% per year. You know, there was a survey that I'm trying to think of his name. The guy who runs the financial YouTube channel. Oh God, Dave Ramsey. Dave Ramsey. He runs that YouTube channel, and whatever else he runs. Has written a couple of books, and he says, "Well, I interviewed a bunch of millionaires, and they said that the path to success was to pay down their mortgage as fast as possible and then invest money after that." It's like, yeah, but you're also in a declining interest rate environment, and their mortgage rates were really high. The inflation was less than the mortgage rate. So If I were in that scenario, I would pay my house off immediately. If me personally was in that scenario, but I'm not in that scenario. I was born at a different time. So if Dave Ramsey were to interview me because I would meet his requirements to be interviewed, I would say no, I carry mortgage debt. And I would look to actively keep some debt open as long as the interest rate was below the rate of inflation and what the dollar was losing purchasing power. So the Federal Reserve and our government turned us all into speculators. And the only way to preserve purchasing power is to either take the purchasing power today in a form of a loan or a mortgage and pay it back through devalued dollars, which I see as one of the most sure bets. Now, I don't want to take my purchasing power today and throw it at a mortgage. I would rather acquire assets that go up in value as the dollar declines and pays me dividends. I'd rather have that. And if I know what I'm doing, here's something that I've learned. You want to dump your skills, you want to dump your time, your effort, and acquire skills in things that will pay you back over time. And I used to work a 9 to 5 job, and I hated it. And people at that job, they would say, you know what, you need to develop your skills. I said, what am I going to develop my skills for? What am I going to dump all my time and effort into? Well, you need to learn our ERP system, or MR, Material Resource Planning, Electronic Resource Planning System, or you learn inside and out Excel. And I'm like, okay, so I learn all that. How much more money am I going to make over my career? And it's all going to be money on the back end, not on the front end, right? So I'll be older as I'm making this money. If I go and I learn the stock market and I learn how to invest, I can make many, many, many millions of dollars. I could, if I really applied, could probably make hundreds of millions or billions of dollars by the time I pass away. Granted, that money won't mean anything when you're that old anyway. It's all kind of, I'll say, adjusted to your age and what you can do with it at the age that you're at. So it's about buying time and about having money at a certain age so you can do something with it. I mean, Warren Buffett in his 90s being a multi-billionaire, I don't think that really matters. So if you're going to dump time and time into learning a skill, at least learn something that's going to get you a large payout. If it's not going to get me a large payout, if all it's going to do is make me another $5,000 or $10,000 a year a couple years from now and past that, then what's the freaking point? What is the point? So I know I kind of went off a little bit of a tangent there, and people over 70 not having a paid off mortgage, I think that's kind of smart. So people may look at it and be like, well, what are these people doing? It's like they're actually protecting themselves against the inflation that's out there. And that's kind of, in my opinion, one of the most sure ways to kind of protect yourself against that. Gary says, when the currency is being systematically devalued, exactly what we were talking about, it creates a disconnect between nominal and real values. Completely agree. Wages may be rising in dollar terms, but they are falling in terms of what you can actually buy, purchasing power. The cost of living is not just rising, it is accelerating away from the average person's ability to pay for it. This is not a bug in the system, it is a feature. It is the way that the government transfers wealth from the productive class to the political class. 100% agree. So what the game is how do I live in this system that is designed this certain way? How do I benefit from it? How do I take advantage of it? How can I profit or at least at a minimum preserve my purchasing power, which ultimately what you're doing is you're sinking human life time, exchanging that for cash, and then these guys come and steal your time through devaluing the purchasing power of the cash. That's ultimately what they're doing. They are stealing people's time and efforts in the system. And what I'm doing is, how can I outsmart them? You can take debt, throw it out in the future, use the purchasing power today to buy assets, have the assets go up, have those assets kick off cash flow to pay off this debt with ever decreasing purchasing power dollars. And I think that's about the only way that you can basically get out of a system that has a rapidly declining purchasing power currency. I read a book somewhere or an article or a combination of both, where they asked people in Germany, what would you have done different if you knew that a hyperinflation was coming? The majority said that they would have gone deep into debt. I'm not stating that we should be going deep into debt. I don't know if we're in a hyperinflation or not. It's hard for me to distinguish between a regular bull market and a bull market that's not going to ever end, where gold and silver go up massively with just small, short little pullbacks. But that's what they said. Now, does that mean that I'm going to go leverage up to the hilt? Probably not. I'll probably do something in the middle where it makes sense to keep the debt that I have, and I'll not carry debt in other areas. Like, I'm not going to carry a 20% credit card debt. I'm not going to do something like that. And then you have to also think, what stuff are you going to buy? You're just going to buy a bunch of crap anyway? I don't need that crap in my life. Come down. Average U.S. electricity price over the years. Look at that thing go up. We had a nice little kind of resistance line going through here, and then we broke out, did a retest in electricity prices, and are rocketing higher. Yeah, U.S. electricity prices. The patterns are deep in human psychology, is what I'll say there. Christine says China believes higher oil prices are coming in the years ahead. It says China, the world's largest crude oil buyer, is adding 11 new oil reserve sites this year and next as Beijing accelerates stockpiling the strategic commodity to safeguard supply security, according to public sources reviewed by Reuters. 3 of the 11 sites are inland in northern Shanxi province and southwest Yunnan, while the rest are on the east and south coasts. Do you know what my opinion is? It's not that they believe that oil prices are necessarily going to go higher. They have nowhere else to put their money. There's nowhere else to go. This happened last bull market. They started buying copper and nickel. They started buying everything that was a hard asset. Why? Because they can't put their money back into the United States Treasury bond market. So where are you going to put it? Where are you going to put money to preserve your wealth? Go buy crude oil, go buy copper, go buy hard assets all over the place. There's nowhere else to put it. But that's exactly what I'm talking about, capital rotation events. Capital rotation events are when other assets don't work. When the bond market is screwed, you're not going to put money there, so you're going to put it somewhere else. Well, let's go build some reserves of crude oil. If we think crude oil is going to get more tougher to get, and we can't put our money in the bond markets around the world, well, let's just go buy a bunch of crude oil. Makes sense. Gary says, the choice is yours, but know this, the debasement trade is not waiting for you to make up your mind. It's happening now. And every day that you delay, you are falling further behind. Now, they're debasing the currency. They have to, correct. How do we protect ourselves? I have a mortgage that's literally getting decimated in its purchasing power dollars. Like, my mortgage is fantastic. It's one of the best things that I've ever done, is get a mortgage at a low rate, throw it out 30 years, and then laugh at the people who actually want to hold the mortgage. It's like, you really want to get paid back? In 30 years, my mortgage is going to be less than buying like a pound of steak. I mean, think about that for a second. Think of how much steak prices have gone up, or whatever prices, egg prices, steak prices. Price your mortgage in terms of pounds of steak. Price your mortgage in terms of pounds of eggs, or cartons of eggs, or dozens of eggs, or whatever it is. That's the whole thing about ratios. It's the only thing that you can look at and say purchasing power equivalence. What did a house cost in pounds of steak in 1950? What does a house cost today in pounds of steak? And why does that matter? How much money do you make in terms of ounces of gold versus in 1950, how many ounces of gold did they make? It was a heck of a lot more back then than it is today. So what does that mean? It means they are literally destroying the currency. So you want to borrow in the currency, let them destroy it, and pay it back with garbage currency. Tavi says $4,000 an ounce gold. Says if we earned $1 every time someone tried to time a correction in gold using technical analysis, we'd all be filthy rich by now. Let's call this what it is, a gold rush. I wouldn't compare this cycle to the 70s or the 2000s. The imbalances fueling central bank gold buying today are far more extreme. If you follow that logic, then we really haven't seen anything yet in his view. Gold adjusted for the US money supply. It's breaking out. Now, the market condition determines when money flows into gold, and then gold accounts for the US money supply. It's all based off of the market condition. So when this is breaking out, it's telling us about a market condition, that financial assets are not in favor, and that is turning into hard assets. Capital is rotating. It's happening right in front of our eyes. It's what's happening. I like what this guy wrote, so I'm going to read it. He says, I'm a big fan and often with Javier, but not on this one. Is my Bloomberg monitor broken? Are both Brent and WTI not backwardated 1 to 6? China and India inventories are down slightly in third quarter. OECD inventories still generally low despite cartoonish oversupply. It's October. The crash should be happening now. Perhaps it will start tomorrow, next week, or the week after. Calling oil markets in the short term is hard. Fortunately, I don't do that for a living anymore. Or on my numbers, we are firmly in the bottoming phase after a 2 to 2.5 year mini down cycle. The max bullish 100 plus per barrel super cycle calls from mid 2022 have been replaced with $50 oil glut cartoonish oversupply downsides. We are off $60 a barrel from Russia-Ukraine highs. Why argue about the last $5 or $10 or $0 in downside in oil? Demand is rising globally as failed peak oil demand calls get pushed to the right, even as they should disappear altogether. Exploration is dead. Shale is maturing. The world needs massively more of all forms of energy, including crude oil. 1/8 of humanity is rich. Still 7/8 to go. That's exactly how I view the market. It's that simple. And everyone's so worried about the short-term market movements. And we're, at least from a fractal perspective, I think we're pretty close to a bottom. So I agree with them that we're close, and that I don't know where the heck this oil is going to come from in 5 years. We have a lot of oil to produce, and we need to do this. And I don't know where it's going to come from. So this bet is an easy bet for me. It's an easy bet to stay long on oil because the fundamentals out a few years are ridiculous. Ridiculous. Now in the short term, everyone gets worried. The sentiment shifts left and then right. Now I've been bullish the whole way. And yes, pullbacks are a part of this game. So we'll see what happens in the short term, but I think long term, we're looking pretty good. Here's Palladium. Palladium's got a rounding bottom, looks ready to pop. This is what the start of a new trend looks like, from distribution to accumulation and now expansion. Palladium looks good. Peter Lynch on the key skill for a 150 bagger. He says, my candidate for the world's greatest amateur investor is Charles Silk. Charlie bought Blockbuster many splits ago in 1984 for $3 a share. It wasn't called Blockbuster yet. It was called Cook Data Services, which fit into Charlie's area of expertise. The shares he bought for $3 a piece are now worth $450 a piece today. So his $10,000 investment became a living in itself. Thanks to this one exciting stock, he was able to abandon telemarketing and devote himself to his favorite hobby, looking for more exciting stocks. He and two of his three sons are now full-time stock pickers. I've often said that a couple of five-baggers every decade is enough to make do-it-yourself investing a worthwhile pastime. With a 150-bagger like Cook Data, one every half century or so is all anybody needs. Call Charlie a lucky man for stumbling onto Cook Data Services, but luck didn't make him a millionaire. The hard part was holding onto the stock long enough to get the full benefit. After the price had doubled and then tripled, he didn't say to himself, I'll take my profits and run, like many investors who invent arbitrary rules for when to sell. Arbitrary rules. He wasn't scared out when the price dropped, as it did several times, and he ignored the highly publicized negative comments made by forecasters and experts who knew less about Blockbuster than he did. He had the discipline to hold on as long as the fundamentals of the company were favorable. It was not a guess on his part. He was doing his homework all along. Guys, all you need is one gigantic mover. That's it. Now, here's the thing. It took me many years to figure this out. If I knew this in my 20s and I had someone to mentor me, I would have had a completely different life. Because what I would have done is I would have gone around and looked for stocks and just held on to them. And I would have held on to them no matter what. Even if my job said, hey, you know what? We're going to get acquired and you're going to have to sell all your stocks in your 401k as we get acquired because it's not my assets, it's their assets. I would have quit my job if I would have known how important letting these companies ride is. So the big money is made in the waiting, the long-term waiting. It's not fast money. You're not going to get rich quick. No one does. Just throw it in the garbage if you think that. Like, it's not going to work. Now, in cyclical companies, we may not hold as long as, say, some of these other companies, but you can still apply it to the entire cycle, in my opinion. Tim says gold taking out $4,000 today will be a psychological trigger for silver to start the squeeze towards triple digits. It will be fast and brutal, and a lot of people will be caught on the sidelines, including Rick Rule, who already sold big parts of his silver explorer positions, according to Tim Hack. Yeah, totally. I'm riding it. So whether we go up or whether we go down, I don't know what the short term looks like. He could be completely right. I'm riding it. I believe that the saying is you miss 100% of the shots you don't take. And if you're not taking a shot at one of these big breakouts, you're not going to get the rewards for it. So I'm leaving it in to take a shot at this big breakout in silver. It's exactly what I'm doing. Now, that doesn't mean that I'm going to go broke if it doesn't work. I'm up massively already. I got a really early entry at, basically at this corner here for a lot of the junior mining equities and a lot of the other stuff. But, I could understand someone taking profits if you're up a bunch. It makes sense. I understand it. I'm gonna leave it go. I'm gonna let it ride though. I'm taking my shot, so to speak. If you had 5 million net worth, would you spend 250,000 on a Porsche 911? No, I would not. I would definitely not. Complete waste of money. Complete waste of money. I can tell you what I would do. If you are truly a car guy, if you're truly a car guy, like deep down, if you are a car guy, what most people do is they build a car for what they want. If you're a car guy, which means like you like driving, you love driving, what you'll understand is that you don't need a super fast, very expensive car to drive. What you want is you want an exhilarating car that's fun to drive. You don't need to spend $250,000 to do that. You can go buy a engine swapped car or a car that is cheap, that is still incredibly fun to drive. You don't need a $250,000 car. No one does. The people that spend that type of money just need to either blow money because they have way too much money and they're like, well, it's going to get burned up anyway, or they try to show off. So either the person who owns it has too much money or they are not internally happy with themselves deep down, ultimately. Now, if you are a car guy and you have to burn money, okay, I understand that. You can go track the crap out of a GT3 RS. In fact, I saw a GT3 RS this past weekend. It looked pretty ridiculous on the road because it's got that gigantic rear wing. But that's my view. I would almost be afraid to buy one of these because I wouldn't want to look like a douche. I mean, in all honesty. Tim Hack, welcome to the future banana republic called the United States of America. The respective creditworthiness and loss of global power will soon become priced in its currency. At some point, it's simply over. Forces far greater than us have already learned this. Implosion due to overextension is impossible to stop once it occurs. And there it is. He's got the dollar potentially losing value against other currencies. But again, I think all currencies are dropping like a rock. So this is a relative strength indicator, which means money's going to flow a little bit different into other currencies outside of the dollar. But I think they're all dropping like a rock. They've all jumped off some airplane, skydiving lower, and we're just measuring the relative position in relationship to the 4 or 5 skydivers, all falling and dropping like a rock. You can measure and see the destruction of currency when you price it in gold. You can price gold in Japanese yen, price gold in Australian dollars, Canadian dollars, and American dollars. And you know what you're going to see? All currencies look like garbage. David Morgan, I'm not saying platinum will trade higher than gold, but historically, this still looks interesting, which he's kind of implying that platinum has always, for the most part, in history, traded higher than gold. And we've got this disconnect in the beginning. In the beginning of this disconnect, where we had the ratio get so cheap, 110 years or so, you can see the disconnect here in the 1800s. That's when the ratio of platinum to gold was super cheap. We've got that same scenario setting up right now. And yes, I think it's going to correct itself over time, where platinum's going to go up. Let me see here. Reminder that OPEC Plus held 4 million barrels per day spare capacity when the 2010 to 2014 bull market began, and slowly released that to keep prices in check. Narratives that we need zero spare capacity or sustained ultra-low inventories to see higher oil prices are completely false and dangerous. So this is spare capacity. Go look at the mid-2000s. Spare capacity has been about 2.5 the entire time. And oil prices have moved up and down during that time frame. Dow gold equals 1. A beautiful fractal is playing out in the gold to silver ratio. And a move to the 50 area can be expected in as soon as 12 months. At $5,000 gold, that is $100 silver. Two big round numbers that I will not be surprised to see hit in unison where the big correction ensues in this ratio. We had another shoulder head shoulder here, and we have another shoulder head shoulder there, which is developing. And maybe we get a blowdown move where silver explodes out of that 45-year cup and handle, which will also bring this ratio lower against gold. High Heat says, I continue to buy oil and emerging markets daily, monthly. I'll stop when the world recognizes the value. What a time to be alive. I agree. I think oils are great, and I think emerging markets are too. We already talked about that one. And that's it. That's all I've got for today. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website, specials coupon code. That's all I've got. And look for a midweek update that will be released out on the website. All right, guys. See ya.